All right. Hello, everybody. Welcome to the official Q4 Nvidia 2024 stream. We are going to have the next 2.5 hours packed with a decent amount of information. Obviously, Nvidia is one of the most important companies on the planet. And given the recent stock market volatility, their results are going to matter more than ever. I'm here with Jose, who has been a OG Nvidia shareholder for the past 5-7 years now. And he has been following the story very closely on his channel as well. It's time to discuss what the heck is going to happen for Nvidia. Jose, are you nervous? Are you scared? What are you feeling?
No, I'm not nervous, not scared. Um, and it's crazy. Is this our third time doing it or fourth time doing it? I forget. We've been doing this for a while, so it's pretty fun to be able to come back and say hi to your community and obviously shout out to my community. But super excited about earnings. I mean, as a long-term investor, I'd love to hear Jensen thoughts. I love to hear the Q&A session and kind of see where the market is evolving. I mean, we already kind of got a lot of great news in the past few weeks with big tech. Big tech has mentioned that they're investing heavily in capex. We've seen kind of all these big tech players dispute this thought of DeepSeek really kind of creating some issues in AI investment. And what else have we seen? I mean, we've seen Amazon and Google announce that if they had more capacity, they would have been able to grow their clouding market a lot faster. So from what I'm seeing in my channels, short term, there's still plenty and plenty of demand.
It's going to be exciting. It's going to be very exciting. Nvidia stock is down 5% year to date. Really hasn't moved that much. A lot of people are getting antsy because they are waiting on Nvidia to go back to the moon. Granted, Nvidia has, I think, quadrupled from the lows of 2023 or a little or quintupled. So, I mean, if you've been in Nvidia for a long time, you've done very well. It's just a lot of retail got into Nvidia basically around the 100 to 120 range, I would say. And DeepSeek created another opportunity for a lot of people to get into Nvidia as well. And so you got a lot of new
You are one of
eyeballs.
them, right?
I was one of them. So this is the first earnings that we're doing where I have, for me, a substantial position, 500 shares at $125 average. I have no covered calls on my shares. Let us know for those who are in the chat if you're comfortable disclosing how many shares you own, how long have you owned it, what your average is, do you have covered calls? Let us know all that in the chat and we'll see some of the comments that come in. But I've got some real money on the line for me as well. And so it's going to be really exciting to see my net worth either go up or down by 10% based on this Nvidia move. Here's the first question for you, Jose. We're going to get results in about 15 minutes. Do you think the DeepSeek controversy is something that investors are going to factor in, or was that just a moment, it happened, and now no one really cares that much about it?
I think people care about it. And I think in the future, we're going to see more moments like this of AI getting cheaper. But if one was to take a closer look at the last quarter's transcript from Nvidia, Jensen actually said that his hopes and dreams are that AI kind of becomes so cheap that you're running AI 24/7, right? So if that's the goal of kind of running these massive AI factories where AI is running on a 24/7 basis, the only way we can get there is if AI ultimately becomes super cheap and you're just doing inference over and over and over and over again. So that's one of the reasons kind of the DeepSeek drama at first, I'm not going to say kind of the price reaction shook me a little bit. And like I took some time to kind of read back what Jensen and the team has said. And if you kind of take your time, you're going to see that NVIDIA wants AI to be so cheap that everybody is able to run it. I mean, right now it's pretty expensive. You don't see a lot of consumer-based applications, right? But I think we're getting in that right direction. Today, Amazon announced Alexa Plus, which is kind of is showcasing that AI is getting cheaper. Now it's going to be coming more into the consumer space. And I think that's the right direction that we should be heading to.
We got a lot of Nvidia OG bulls in the chat. I mean, a lot of you guys with averages below even $50 right here. So a lot of people have been holding on to this story. So, Jose, you're one of them that even took advantage of the DeepSeek dip and bought even more. The street wants $38 billion. In reality, what do you think they actually need to put up for the street to be excited about this earnings?
Oh man, what they need to put up, for the stock to be excited. I don't know. I want to say I expect them to beat expectations. My thought process is we're actually going to be closer to like $39.5 billion. The reason I say that 39.5 is Nvidia, their revenue is capped, and the reason it's capped is because there's the supply capacity, right? You can't build enough chips. Their builder TSMC every quarter is increasing that capacity. Historically, for the past 6 quarters, it has grown revenue sequentially by $4 to $5 billion. So you can kind of see a pattern of how much TSMC is kind of able to increase in capacity. So if last quarter they did about $35 billion, I believe, in revenue, if we continue to see that pattern of $4 to $5 billion sequential growth because of TSMC's manufacturing improvements, then I think we're going to be closer to $39 to $40 billion. So I expect it to be closer to that 39.5. But I just don't know. I don't know if that's enough for Wall Street. But I wonder if sometimes Wall Street forgets that the revenue is capped, and it's capped because there's not enough demand. It's just they can't build fast enough, which is a good problem.
Which is a really good problem. So here we're looking at right now the Nvidia quarterly revenue trend from last quarter. They put up 30 billion in data center revenues, 35 billion overall for the quarter. Analysts are expecting 36 billion this time and 38 billion overall. I think realistically, and I think you're right, Jose, they probably put up 39.5. I think they got to put up 40 to get that 10 to 12% implied move to the upside. I would not be surprised if the stock gaps down 3 to 4%. I think that's okay because I think that dip gets eaten up. If we, gap down 20% or something, then there's an issue with the overall guidance. But if we bring in around, call it 40 billion, 36 billion, or 38 billion of data center, and the guide for Q1 is 42 billion, which is kind of the whisper number on the street, then I think the street will be happy. When it comes to gross margins, the street's expecting 73.5%. Do you think there's any world where they come in below 70% on those margins?
Below 70%, no. If anything, very like 72 point something would be my biggest decrease. But I mean, they mentioned right now as Blackwell ramps, they're going to be kind of in the low 70s. And once Blackwell is fully ramped and kind of fully moving, it should go back to the mid 70s. So I think we're going to stay with this. And at the end of the day, there's no real competition still for NVIDIA to see any form of pricing pressure, right? I don't think this company has any pricing pressure at the moment. So if we get to the lowers, it'll be more like 72-ish. But I'm expecting that 73. And I do believe for guidance, they'll give us about $42 billion. I'm looking at my numbers right now. I'm expecting around 42 to 40, between 42 to 43 on the low and high range for guidance.
Let's talk a little bit about China. By the way, guys, I put a poll in the chat. I'll be closing the poll in about 5 minutes. It was, do you think NVIDIA pumps, dumps, or is flat? 62% of you say pump, 20% say flat, 18% say dump. So obviously the far majority of people here believe that NVIDIA can pump. China. So there is some investigations going on right now that NVIDIA is shipping their chips to Singapore and Singapore is shipping them to China. The argument is that DeepSeek got a lot of these chips potentially illegally. Potentially they got them before the export controls. Do you think investors are going to ask about this, and how much of an impact do you think it's going to have on Q1 guidance?
So I do think there's going to be this question that comes up. And one of the big reasons, right, is I think in forms of quarterly revenue, about 22 or something percent of revenue goes to Singapore. And then somebody has mentioned that only, I forget who's done the study, but like less than 2% of those chips actually make it to Singapore. So it has created kind of a lot of this fear of NVIDIA chips just kind of going somewhere. I think it's important to remember how accounting works for a lot of these companies. So we do have a lot of server makers, right? And who are the people that buy NVIDIA chips? There's usually just two main customers. The first are kind of the hyperscalers like your Microsoft, your AWS, and all these cloud players. And they don't need a server maker team. They're big enough that they design their own servers and build up their own infrastructure. So when NVIDIA sends to them, they send it to wherever those data centers are, be it United States, be it wherever. Then the second biggest customers are kind of like these ODMs, the companies that build the servers for those that might not have a server team. We do have a lot of those server companies kind of their main place of HQ is in Singapore.
Right.
So it shows that that's where they send, but they might be sending it to some other parts in Southeast Asia, where maybe Thailand, and some other places where these servers are actually being built up. So while there is some room of maybe some fishiness happening, I don't think it's as bad as some of these bearish case are making it seem. I think it's important to understand how those numbers work. And I'm going to say Nvidia is probably one of the best at understanding their whole supply chain. Like they're not some chip companies, I'm going to say they just make a chip and sell it and say, hey, you guys do whatever you want with it. Nvidia, for a way for them to understand their overall market, to understand how things are being built up and how to improve the whole line, they work with the end consumer, they work with the middleman. I think they have a really great picture of the whole supply chain, but there's definitely a possibility for some slips ups there. I do believe it's going to be a question, but I don't think it's as big as the market might be making it seem.
Yeah, I think there's going to be a lot of questions the analysts have. For everyone who's joining right here, yes, you can listen to us and we're going to play the call. The call is going to be boring for the first 35 to 40 minutes. It's literally just them reading numbers. But after that, we get into the juice of it. And I'm assuming there will be some very important questions asked about the future of what's going on with NVIDIA. Shout out to Matt Money. Thank you for being a channel member. He says, when island, hopefully all of the NVIDIA OG bulls that are holding on to these shares get closer to that island. Eric, thank you for becoming a channel member. And then Farzad, thank you for the super chat. Amit is too legit to quit. I just did a podcast on Farzad's channel, and that'll be out in a couple days. So shout out to Farzad being here. We got 2 minutes. If you're new to the channel, be prepared for the ringing of the cowbell at 4 p.m. We ring a cowbell on the channel every single day as we close out the markets. Are you at all anxious, Jose, or are you kind of just like it's one of those quarters where they got to give a good guide and we'll see what happens in the future? But I don't think you're expecting 20 to 30% down.
Yeah, I don't. And there's two things I'm really curious about in forms of maybe bearish case. With the China response, there have been some talks, and some of the channels that I follow discuss that the H20, which is the chip for China, Nvidia has actually stopped the production of that. And the reason being is maybe we might see the Trump administration put even more export restrictions in China. So I wonder if any analysts are going to say, hey, look, has there been any changes to the H20 chip? That could create maybe some pressure for the stock. The second thing I would be curious about, and I'm losing my mind here that I forget what the second thing is, so I'm just going to ramble really quick as
That's okay, because we got 30 seconds to the close anyway, so I'll get into the close and then you get your thoughts together. See, you're already getting nervous. I could tell, It's making you lose your mind, literally.
The second thing is, before this current administration, the Biden administration did an AI diffusion law, which kind of created some more pressure in some of the AI data centers outside of like the US and maybe some other countries. I wonder if that has created any pressure in the short term. So would love to hear if analysts say anything about that.
All right, here we go. This is why we invest in the equity markets for these days, even if they are nerve-wracking. Wednesday, February 26th. 4 p.m., the stock market is now closed. All right, now we're going to wait. I think it's at 410, right, Jose? 410?
Yeah, 410, 415. Maybe I think it's usually closer to 420. So it's going to be a quiet few 20 minutes from now.
Okay, so we also have Salesforce that we should get their numbers soon. That's going to be important. And we also have Snowflake. So Salesforce and Snowflake, we'll be taking a look at their earnings, give you guys the updates as soon as we get those numbers. We have about 15, 20 minutes until NVIDIA. The street might take it up or down just based on whatever jitters they have, but it's going to be about 15, 20 minutes until we get the official numbers. And then at 5 p.m., we'll be streaming the call live, and we'll see what goes on from there. In terms of how the stock market ended today, Tesla, pretty rough day, 290, down about 4%. Super Micro up 12%. Maybe it pumps if NVIDIA continues to do well. NVIDIA up 3.67%. Snowflake right here was up 1.25%. Salesforce is up 0.5%, but it is now tanking. That's our first mover for the day, down 7%. Salesforce is down. I'll try to get those numbers in just a second, but that one is getting a bit of a tanking. Robinhood right here up 6.38%. The Qs were positive today. Palantir right here up 1.69% as well. Some of the retailers took it on the chin. Nubank was up about 2.45%. T-Mobile, Verizon, AT&T, a lot of the companies that were up yesterday when we had the switch from value to growth. or from growth to value. They went back down today, and growth took the lead. Google, I don't know why they knocked off Google so badly, 172. That is becoming a bit ridiculous. That one's down 1.73%. And Salesforce right here down a nasty 8%. That is not good because Mark Benioff's been talking about agents for a while, and agents are supposed to be a super bull case for the company. Jose, any quick reaction to this as I get the numbers for this?
With Salesforce, no, but I agree with your previous thought. I think Google is getting out of hand. If there was one major cloud service provider that I would be buying at these levels, I think it's Google. I think people are sleeping on Google. They just mentioned that huge deal with Salesforce. I think yesterday about a multi-year, multi-billion dollar deal. So Google definitely looking pretty attractive.
Yeah, Google at this point is trading at close to 15 times 2026 earnings. Salesforce numbers are out. Let's take a look right here. It looks like they missed on revenue, beat on EPS, and that's why the stock is down.
Modi has the numbers for Salesforce. Seema.
It is a beat on earnings for Salesforce in the fourth quarter, Morgan, $2.78 adjusted versus the street expectation of $2.61. Revenue was a slight miss at $9.9 billion. Estimate was for $10.03 billion. So that's perhaps what is contributing to shares of Salesforce moving lower in overtime by 9%. Let's get you some more details on Agentforce. It's AI agents. Since October, the company revealing that 5,000 Agentforce deals, including more than 3,000 paid, have come to fruition. Data cloud surpassing 15 trillion records, which did double year over year, I might add. So we'll get you more details as we comb through these numbers here, and also commentary from CEO Mark Benioff, which I can just bring you right now. We had an incredible quarter and year, he says, with strong performance across all our key metrics, including the highest cash flow in our company's history and more than $60 billion in RPO. He says they're no better position than Salesforce to lead customers through the digital labor revolution with our deeply unified platform. So once again, touting the company's AI products and the leadership that they are playing. Stock is now down 6%. Back to you.
Not enough for the street. Not enough for the street. Salesforce really getting wrecked right here, down 6%. Would not surprise me if that recovers. It actually happened last time. They were down 12%, then they recovered up about 15%. So we'll have to see, I guess, tomorrow and what they say on the call. But Salesforce is down 6% right now. Snowflake, let's see if there's any earnings. There's nothing crazy there. We do have a bunch of other companies as well as we wait for Nvidia. eBay has earnings. Let me see if we're getting any movement there. No movement on eBay. We also have Joby, which is similar to Archer. I know a lot of people care about that one. And Teladoc. Teladoc, we have no reaction yet. And Joby, we also have no reaction yet. Nvidia right now is basically flat after hours, down about 0.24. Still waiting 20 minutes for that one. Oh, also IONQ. Yes, we have that one. Quantum name. Jose, that one's down 4%. Any quick thoughts on Quantum? We have GTC coming up where Jensen will be talking to some of these quantum companies.
Yeah, so I think it's pretty interesting how quantum day for GTC is going to happen, and it's going to be Jensen who just really kind of put that bearish sentiment in quantum market that said 15 to 30 years, and then you kind of had like a lot of these CEOs kind of try to fight him for it. So I hope they come with that same energy during the event. I think it's going to be a fun event, and I'm gonna love to hear who's going to end up being right here. If it's something that informs of market, like true exposure to the whole world, is that closer than expected or further? I mean, we heard Microsoft just recently announced their quantum chip, and they mentioned that, hey, look, it's actually closer a few years away. So I'm definitely going to love to see that energy during the event.
Snowflake was up 5%. Now it's fading a little bit, kind of going back and forth. Let me see if I can get the numbers on that real quick. Snowflake has been beaten up over the past year pretty badly. Would not surprise me if they put up some growth and they can get momentum. The one thing about Snowflake that is an issue is deaccelerating growth, a little bit of the opposite problem that Palantir has, which has been growing, reaccelerating growth at 36%. So I think last quarter they grew at 26, 27%. If they can get back above 30, Street would be very happy. But we got to see if they're able to do that. The stock is now flat. It was up 5%, got to 178. Now it's at 1.65. Oh, C3 AI, they have earnings as well. I do have those numbers. C3 beat on the top and they beat on the bottom. Salesforce is now going red. C3 stock is flat. They missed. I mean, they lost 12 cents versus 25 cents, so that's a beat. And then 98.7 million versus 98.12. That is also a beat. Really nice beat on EPS, slight beat on revenue. That stock is up about 1%.
And Salesforce, I mean, Salesforce dropping, I think I've never met a CEO that has so much hatred for Microsoft CEO. That thing always gets me. I find it hilarious. The only other CEO hatred I feel is Mark Zuckerberg with Apple. But I think agents is definitely going to be a bullish case. The more I use a lot of these AI tools, the less work I'm doing and a lot of the things that I'm providing, or the faster I'm getting to kind of get these research papers out. And I see a market there, but I think for like the enterprise space and for like a true product, I don't think we're there yet. So maybe
Yeah.
that's why the street might be a little bit, they might be expecting too much from Salesforce.
I would agree. I mean, it's going to take some time for agents to really get up there, but eventually they're going to happen. It's just, it might not be here at this valuation for Salesforce. Here is Snowflake's numbers. Wow. 30 cents versus 18 cents. That's a nice beat. 12 cents on EPS. Revenue 986 versus 956. I don't know if that's enough to get them to 30% growth, but that's a beat by 30 million. And if they did get to 30% growth, then that would be psychologically something that the street would be very happy with. They have got to 28% growth, 28%. So Snowflake, again, 986 million year over year. That is 28% year over year growth, 27% to be exact. They now have 580 customers with trailing 12-month product revenue greater than 1 million, 745 Forbes Global 2000 customers. RPO was up to 6.9 billion, which is up another 20% as well. Nvidia is going green right here. Snowflake is up 8%. There you go. Snowflake getting some love. Now we are green. IONQ, this one is down about 4%. I'll get their numbers in a second. Nvidia slightly up. Salesforce is still down about 5%. Palantir is down about 1/3%. After hours, Tesla's up just slightly. Google's up slightly as well. And then Snowflake right here up now 10%, really getting some love. I think Marathon has earnings today as well. Marathon is flat after hours, up about 0.64%, but no numbers on them yet. Is Snowflake at all interesting to you, Jose, as an AI play, or?
I mean, I from the top, I don't know much about Snowflake. I just know they do really work kind of in that data warehouse platform, and obviously in AI applications, data is key. So I see kind of like a top level growth opportunity for them, and I do believe there could be an indication with their growth on how AI is doing, but not one I follow too much.
All right, we are still waiting for Nvidia results. They are not out yet. We are going to see what happens. I'm going to close the poll here. 61% of you said pump, 21% said dump, 18% said flat. So the far majority of us are betting that Nvidia ends up pulling this off. Let me take a look at eBay. I believe we have their results. eBay is down 7%. eBay is getting hit. I have not used eBay in a very long time, but people
another kind of boring stock here for the semiconductor is Synopsys. I saw June kind of talking about it. It's definitely, I see the stock is up after earnings about 2-3%. And this is one that many people ignore. It. It's kind of like the software is the company that helps kind of design the chips. So if you're designing a chip, if you're designing some from a board, you're going to be using Synopsys. So the numbers look great. They beat earnings, they beat revenue. And I still believe even with this pump, I don't own it, but I do enjoy the valuation at these levels.
Yeah, 303 versus 279. That's a beat on EPS. 1.45 versus 1.45. That's in line with revenue. So not too bad for Synopsys right here. That stock is up. Nvidia's at about 420, not 410. So, or it might be 415, but it's going to take a couple more minutes to get Nvidia. Snowflake, yeah, I see you guys in the chat saying that's good for AWS. I agree. I mean, Snowflake doing well is absolutely great for the hyperscalers, also good for Nvidia. They have a bunch of different collaborations with Nvidia. In general, it's good for SaaS. You want to see SaaS companies get a bid. You don't want to see SaaS companies not be the beneficiaries of all this AI CapEx spend, because they're supposed to be the software applications where people get value from this AI. And at least from that perspective, whether you own Snowflake or not, it's nice to see it getting some momentum. IONQ is down about 10% right here. Marathon's up 1.6. eBay's down 7. Nvidia up 0.5%. No earnings yet for Nvidia. Joby's up 1.78. Teladoc is down 6%. So not really getting too much momentum there. Looks like their earnings weren't the best. And then Salesforce right here now kind of evening out at down about 4.6%. Honest also at earnings, apparently. Honest company is down 5%. This is a small cap, 573 million.
Is this that baby company?
This is the biodegradable diapers, correct?
Okay, yep.
That's what they're doing. All right, now we now we wait for Nvidia, dude.
I mean, yeah, I do want to say, I mean, these earnings calls, they're usually pretty boring. I feel like we always get pretty excited about them, but they tend to be boring on the excitement. I think we're going to get most of the cool news later in March. March is when we have that GTC event. So that's when NVIDIA is going to release and kind of discuss more about their Blackwell Ultra, maybe more about their Rubin, maybe more about the kind of AI robotic space. If anybody's expecting Jensen to come out here like hyping the stock, I find that very rare for him to do. He just kind of shares his overall thoughts. So definitely want to cool maybe some of the excitement if we're expecting a nice.
We are way
Jensen
past cooling the excitement, bro. If this thing does not go one direction, which is up, well, no one can do anything about it. But we're all going to be pretty sad. So we are going to see how this plays out. Even though you're right, obviously no one can predict the stock, but like everyone wants to see this thing go up. Here's Snowflake's earnings, and then we will get closer to Nvidia in about 5 minutes.
How do they look?
John, a huge beat for Snowflake in the fourth quarter, 30 cents adjusted versus the street expectation of 17 cents. Revenue topping consensus at $987 million. The street was looking for 955. And that revenue growth is around 28% year over year. The company, in addition to announcing earnings, revealing that it has an expanded partnership with Microsoft to make open AI models available to users, which does mean that Snowflake, as a data platform, is now hosting Anthropic and OpenAI on its data platform. The street seems to like the news, even though the Q1 product revenue guidance was a bit light. Strong beat for the quarter. Shares are up 12.5%, John.
All right, Seema Modi, thank you. Also, don't miss an exclusive interview with Snowflake CEO. It's tomorrow, 4 p.m. here on Overtime, and we'll be running.
All right, so Snowflake crushed it. That's good. They needed to do their thing. We are still waiting on Nvidia. We got a couple minutes left right here. Nvidia 131.91. Jose, what's your gut reaction? Is your gut reaction that we're flat, up, or down?
I think for me, I feel like I've been reading a lot more bearish cases from Nvidia than in the past earnings. So my gut is telling me we're gonna do green. Just because every other earnings, I feel like everybody was expecting this to moon. I feel like right now from some of the comments I'm seeing, I feel like the market has shifted. NVIDIA hasn't done anything for the past 6 months or for the past 8 months. Blah, 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 blah.
Yeah, I agree. We got Marathon earnings as well. 124 versus 69 cents of EPS, 214 versus 183. Those are some pretty good numbers. So Marathon doing their thing. Nice beat on the top and the bottom. But I agree with you as well on NVIDIA. I've never seen this much bearishness on the name, which is why I ended up buying it on the whole DeepSeek stuff. Marathon right here up 6%. But I don't know, dude, because the comparisons to Cisco, I've started to hear a lot more. And when I got a chance to visit Figure AI's headquarters, which is a humanoid robotic startup 2 weeks ago in California. And I asked him, hey, what's NVIDIA's role in this humanoid robot revolution? He says, I mean, everyone's going to be using NVIDIA chips. And so, like, we can make all the comparisons we want to Cisco and topping out, but I think this CapEx cycle lasts for at least another 5 years.
Yeah, I mean, to me, the biggest indicator that it's not the Cisco is Google and Amazon literally said if they had more capacity, they would have been able to grow their cloud even faster. So that's showcasing that they are seeing actual revenue, actual money coming in from these chips. So there is already a winner. And as long as your product is creating a winner for someone, it's going to sell. And yesterday, I think we heard rumors coming up that Meta's actually planning a $200 billion data center somewhere. The channels are there that their growth is still expected, at least for the next few years.
Yeah, that's the other thing about NVIDIA. I mean, I'm so happy you bring up that point about demand versus supply, because it's like if they had more supply, if they weren't as supply constrained, all the hyperscalers, they'd be doing more. That means they'd be growing more. So I don't think the street can get upset at NVIDIA if they're saying they're supply constrained. If there's any whiff of an idea that they don't have the demand, I would imagine you would agree that's when the street really starts to worry.
Yeah, and I feel like this supply constraint creates a great opportunity for NVIDIA. And I don't know if I've mentioned it in this channel before, but let's say there was no supply constraint, right? In the world that NVIDIA didn't have supply constraint, what I would see is big tech, sometimes they don't know how to spend money. They would go all in into some of these Nvidia chips, and that would create that over inventory issue that we tend to see a lot in the tech space. But because there's a supply constraint, it controls Microsoft and Meta not to have a complete open wallet. And it allows them to, hey, look, we're not really overbuying right now because we just physically can't. So we're going to buy some now, and then we're going to buy some the next generation and the next generation and the next generation. So this supply constraint is creating a safety net, in my opinion, for Nvidia.
Yeah, especially against expectations as well, if they're able to create that safety net and only show that demand is increasing every single year. Marathon right here up 6.3%. Honest is down 3%. Teladoc's down 10%. eBay's down 7%. IONQ down 7%. Snowflake was up 12%. Now it's up 8%. Nvidia basically flat after hours. Joby's up 5%. And C3 AI is down 7%. Salesforce as well is down 5%. What you were saying about the hyperscaler spending money is also, I mean, very true. Meta spending $65 billion, Microsoft $40 billion, Amazon $11 billion, Anduril is going to spend another $1 billion. SoftBank spending $100 billion with OpenAI and Oracle with Stargate. Apple just announced they're spending $500 billion over the next 5 years. Like, if this isn't the golden age for hardware, in particular hardware that's necessary for AI infrastructure to be developed, I don't know what is that golden age. And if this is the golden age, like, I feel like you have to own Nvidia at that point.
And you know, I mean, right now there's supply constraint, right? And kind of capacity constraint, even though we still haven't gotten to that new technology. What happens when robotics really becomes kind of in the consumer space? You're telling me right now we're capacity constraint and we still don't have robots. We still don't have these ultimate AI agents. What happens when those come into play? How much more capacity are you going to need when those solutions come out?
Yeah, I mean, speaking of robots, again, the like this figure came out with a new video today. They've got robots inside of the factory that are starting to do repetitious tasks of managing packages. You would imagine post office workers, et cetera, would do some of this type of stuff. And this is real. This is happening right now. All of this is possible because of inference training on NVIDIA's freaking chips. And Brett and Elon, both two leaders of companies that are innovating in the space, I mean, they think there's going to be billions of robots. And that doesn't mean NVIDIA is going to get all those chips, but NVIDIA is going to get a good amount of them, right? And so from that perspective, I think the levers for demand for NVIDIA are not stopping anytime soon. And as long as they guide for that in 2025, then hopefully the stock does well.
And then, I mean, one market that I thought was pretty cool was the Omniverse. But recently I listened to a podcast that Jensen was in with another CEO, and he really explained his vision for Omniverse. And Omniverse has made me even more bullish for AI, made me more bullish for the robotics market. And NVIDIA is going to be this mastermind for synthetic data in all types of industries. The robotics is going to be a perfect example. But Omniverse, I was bullish in it. There was a recent podcast with the company they did it with was DDN, for those that want to watch it later after this amazing stream. In the last 20 minutes, Jensen actually talked about DeepSeek. And he mentioned how it was why the market was wrong. So that was the first time we've heard Jensen actually talk about it, and he kind of shared his thought process about Omniverse. So Omniverse, always bullish in it, but the way he explained it in that podcast, I think was mind-blowing in my opinion.
All right, here we go. It is 4:20. It is time. We should be getting either a pump or dump soon. So far, we've got NVIDIA up 1.75%. Jose is going to be monitoring the numbers while I'm looking at these candlesticks. My job's a little bit more fun than his job, and we're going to be seeing where this stock goes. We should be getting results very soon. Now we're up 3% after hours, 135.6, 3.3%. This happened last time and it faded out. We got up all the way to like 152. Then it went right back down to 140. Then by the next day, it was down back to 135. So incredibly volatile, back to 136 right here, up 3.7%. We are getting a pump. So the initial numbers, regardless of who has them, whether it's the Bloomberg terminal or whether it's market participants, seem to like them, at least for now. I don't see the numbers on my end. As soon as we get the numbers, we will put it out.
I'm hitting Shift F5 and nothing yet.
Yeah, I'm not. I love you guys in the chat, but I cannot trust the chat. The last time I trusted the chat, I thought Palantir did $5 billion in revenue, and like that didn't happen. It was about 600 million, a little bit less. So We're going to need some sources. All right, now it's up 2%. Now it's going down. That green candle is going smaller and smaller. Oh, please don't go red. Please don't. Just stay green at least. It looks like it wants to go red. Oh boy. Oh boy, oh boy, oh boy. Let me see. See if I have any other accounts that have it yet. Oh, we got it. All right, folks, here we go. 39.3 billion. They beat by $1 billion, 89 cents versus 84. They beat by 5 cents. Nvidia beats on the top and the bottom. Street does not like it. Down 4%. Let's see if that recovers, if that can get back to normal. It's basically at the same price it was at like an hour ago, so I don't think this is that big of a move. Trying to get back to flat right here, but we did beat on the top and the bottom. I think the street really wanted 40 billion. We didn't.
I still haven't seen them on my end on their side, but 39 points. What was it? 39 point what?
39.3.
Yeah, close to the 39.5 that I kind of expected earlier.
That's actually very close to what you expected. Yeah. Now Nvidia is going green. Okay, so to me, now my prediction based on these numbers is I think we end up flat, like, which makes it very non-eventful, almost exactly like what happened in November. But it looks like that would happen.
I think during the earnings call, if Jensen and Colette kind of talk about the demand for the B200, the B300, and maybe cool off some of the ease of the issues that we might have heard about the NVL72 system, maybe that could be a good reason. I think investors might be waiting for more on those updates instead.
Okay, so we have gross margin guidance from Jed in the chat. I believe Jed's numbers are correct. I don't have the full Q1 guidance yet, but 70.6%. Do you know if the street was expecting that, Jose, for Q1?
I don't know. That could be a reason. I don't think they were expecting that low. I know we kind of saw that while it ramped. We were going to get into the low 70s. I don't know if we were expecting 70.6, but it was kind of what they guided of low 70s. The only thing is this might be creating some fears that there might have been some more issues with the Blackwell ramp than previously expected. So I'm guessing this is going to be something we're going to hear throughout the earnings call.
Yeah, I would imagine so, if that's what we're looking at here. Still trying to get the official number, guys. It's not on their website yet. Revenue, we can confirm 39.3, 89 cents. So it's a beat on the top and the bottom, which is good. But looks like something in the guide or the margin story is what's getting the street to not necessarily be upset, but kind of not take it that much higher. Yeah, it's flat after hours. I mean, it's up 1%. Nothing crazy. Q4 data center revenue came in at 35.6 billion versus 34 expected. Gaming revenue 2.5 billion, consensus of 3.02 billion. So a little bit of a miss on gaming and about $1 billion of a beat on data center revenues.
Yeah, but the game, I mean, they even mentioned the gaming was going to be weak this quarter due to kind of the transition from they weren't going to be selling anymore, making any more 44,000 series. They're going to be selling kind of waiting for that production of the 5,000 series. So, and same both for the laptops and the desktop GPUs. So I wonder, but gaming at the end of the day is not that big of a deal for them.
Yeah, and it looks like for Q4 they hit their margin 73.5. They came in line with expectations, which is good. But
numbers are now on the site.
They're on the site. All right, let me see. All right, here we go. Okay, so now give me 5 minutes. I will be reading through all the numbers. Nvidia up about 1.2%. Nothing too crazy after hours. Here are the official numbers from Nvidia. Record quarterly revenue of 39.3 billion, up 12% from Q3, up 78% from a year ago. Record quarterly data center revenue of 35.6 billion, that's up 16% quarter over quarter, 93% year over year. Full year revenue of $130 billion, that's up 114% for 2024. Jensen says, demand for Blackwell is amazing as reasoning AI adds another scaling law. Increasing compute for training makes models smarter, and increasing compute for long thinking makes the answer smarter. We've successfully ramped up the massive scale production of Blackwell AI supercomputers, achieving billions of dollars in sales in its first quarter. AI is advancing at light speed as agentic AI and physical AI, aka bots, set the stage for the next wave of AI to revolutionize the largest industries. Nvidia will pay a quarterly cash dividend, and I believe they still have $50 billion to buy back their stock. We'll see if they bought back any of that in a bit. Nvidia's outlook for fiscal year 2026, revenue is expected to be $43 billion. Oh, that's good. That's really good. Hold on.
Market was
No, that's actually good, right, Jose? Like that's
yeah, the market was expecting somewhere around 42, I think, on those numbers when we looked earlier.
so even though we missed on revenue, I mean not missed, but we missed the sort of whisper number on revenue in Q4. Q1 at 43, JP Morgan thought they would do 42. That's amazing. And they're probably not going to do 43. They're probably going to do 44, right? When they tend to beat by about $1 billion. So that's
Yeah,
incredible.
yeah. So they TSMC is growing kind of the market by about 4 to 5 billion. And I think this is why it's important. I mean, I saw some comments that 43 billion is nothing. Nvidia's revenue can grow faster if they had the capacity, but you need to understand about their overall supply chain. So if they did what did they do today? $39 billion. I'm going to expect that supply chain is going to be very similar. We're actually going to see closer to like 44 to maybe 45 billion next quarter in numbers.
I mean, dude, that I feel like the stock doesn't deserve to tank on that. Maybe it doesn't need to go up 10%, but it definitely doesn't deserve to tank. Now, here, how do you weigh 43 to 45 billion with margins that are down? Do you think that is what keeps it neutral?
I think that might have been the scariest thing. I think definitely the market maybe wasn't expecting it to getting that close to the 70 digits. And that might be creating some fear. But I feel like by Q2, you will have kind of a full ramp production of the Blackwell, and those numbers should jump back up. The other thing that I was kind of noticing is now they have about $43 billion in cash and short-term investments. My question is, what are they going to do with all this cash right now?
Yeah, that is another good question. What are they going to do with all this cash? The stock is not reacting after hours, down 0.4%. So stock's not really caring too much, but we do officially have these results. Let me pull it up right here so we can get another read through of the results. But they are officially in.
Per share, that is 5 cents higher than what the street anticipated, up 82% from a year ago. So it is decelerating, but still higher. On revenues of $39.3 billion, that is higher than the street anticipated. And I'm also seeing data center revenue coming in at $35.6 billion. The street was anticipating 33, so also a slight beat. We'll get back to you with the guidance.
All right. Christina Partsinevelos, thank you. Still combing through that result. Stephanie Link, want to get your reaction to this with a beat on the top and bottom lines. And it looks like data center revenue a beat as well, and the stock spiking about 3.5% right now.
Well, revenue beat, that was good. I think there was expectation that revenue was going to beat, so obviously very positive. But data center, I think, is all driven by the data center. When you have the street that was looking for 34.1 billion, that would be up 11% sequentially, and then the number was better than expected at 35.6. So that's up 12% sequentially. That should be good enough. But I think at the end of the day, we just have to hear the conference call. I think this is the most anticipated conference call of the season, of the earnings season, because we want to hear more details about DeepSeek. We want to hear more about Blackwell and the capacity supply issues and that sort of thing. And then, of course, want to hear what they have to say about the data center build out in general, from Microsoft to Meta to all the big names, where all the CapEx is going. So,
Jose, you think they buy out Intel? You think they say anything about that?
No, I don't think so. I mean, it would be interesting. The advanced packaging that Intel has would definitely help grow their AI chip market, I think. But I don't know. Maybe with this, usually I would say with restrictions, with regulators, it might not go that case. But the current administration, who knows, might allow it. A fun fact, while I was looking, Nvidia did $62 billion in free cash flow for this fiscal year. Amazon did 32 billion this year. Meta did 54 billion. So this company is now generating more free cash flow than Amazon and Meta. The only ones that were higher than Nvidia, again, Nvidia had 62. Microsoft had 70 billion. Alphabet had 72. So, I mean, it's not that crazy for maybe next year. We might see, if things continue in this trend, Nvidia actually provide more free cash flow than Alphabet and Microsoft.
Yeah, that's pretty incredible. I mean, free cash flow is kind of the basis for a lot of how the market thinks about these stocks, and doing more than doing more than Amazon is quite saying something. Here are some other numbers. So revenue, again, is up 78% year over year. Gross margins are down 3%. OpEx is up 48%, which is not that crazy when your revenue is growing 78%. Operating income is up 77%. Net income is up 80% year over year. Last quarter, or last year this time they did 12 billion in net income. This year they're doing 22 billion of net income. That's just a smidge under how much Google does. Google does about 25 billion. So, and Google's, more software than hardware. So this is pretty incredible. And then EPS was 89 cents versus 49 cents, which is up 82% year over year. Fiscal year 2025 versus 2024, they did 114% year over year growth, 130 versus 60 billion in revenue. Gross margin 75 versus 72. OPEX 16 versus 11. Operating income 81 billion versus 32 billion, up 147%. Net income again 72 billion versus 29 billion, up 145%. And then EPS 294 versus 119. Jose, do you think they get to close to $5 a share in EPS by the end of 2025?
I mean,
because my math is $5 a share. You put a 40
Yeah.
PE, you get a $200 stock.
yeah, I'm not gonna lie. I don't have the numbers on top of my head right now of forward PE. So what did they do this fiscal year? I was just kind of looking at my chat real quick.
291 is what it was.
291. I mean,
They got to grow earnings by a couple bucks.
I mean, I'm going to say revenue is going to continue to grow on a sequential basis. At least the trend. There might be some quarters where you might have a hiccup, but the trend is going to continue. So I wouldn't see it being impossible. Especially, I think at the end of the day, as long as Nvidia continues to dominate in this space, big players are going to want to spend their money on their chips, because at the end of the day, if you don't buy Nvidia's chips, you're going to be left behind. If you're Microsoft and you say, hey, look, maybe I'm not going to buy Nvidia chips, Google and Amazon are going to be like, okay, don't buy any more Nvidia chips. We're going to buy them all. And now we're going to start taking market share from you. So this is a market that if you're not buying Nvidia, you're going to be losing out. So I think we're going to continue to see growth in this space.
Yeah, I would agree. If Meta stops buying, Google's going to buy. And then, the risk is that Google gets ahead. What were your thoughts on Nadella's comments the other day, CEO of Microsoft, who said, if we don't grow GDP by 10%, then all this AI CapEx is worthless?
I mean, I don't know. I feel like this guy has been very bearish to some extent. I don't know if Sam Altman has made him a little bit angry of the AI space, and this might be just trying to get back at Sam. But he's still investing 80 billion this fiscal year. If he's investing that kind of money, I think it means he still sees this path that could happen or will happen.
I agree. Let's bring someone else onto the show. They just called in. They are also a big Nvidia bull. Steve, you are live. What are your thoughts to Nvidia earnings?
Whoever is bearish on this is out of their minds.
Okay. Explain.
I like this guy already.
I mean, listen, they got more profitable, and not on a dollar basis, on a percentage basis. Their profit margin just went in Q3 from 55% to 56.17%. This is a hardware company that's generating over 56% profit. This is insanity. Jensen up and to the right every quarter. This is, anybody who's bearish is crazy.
Steve, they did 22 billion in net income. Google does 25 billion. And they're a hardware company, right?
And they're a hardware company. And look where they were last year, up 80% year over year in net income. This is going to be bigger in their fiscal 2026 year, which is really 2025, because they end in January. They're going to do more profit than Alphabet this year. I would be willing to bet money on that.
Stocks,
they're going to be the most profitable Mag 7 company this fiscal year.
Stocks down 1%. Any idea why the stocks?
People are stupid. I don't know what to tell you. People are stupid.
You just think the market's dumb? That's it?
I think people are waiting to see what Jensen says on the conference call, to see if he says Blackwell demand is completely sold out for the entire year or just 2 quarters. I think that's what people are waiting for, to see how far out demand is sold.
For anyone saying Nvidia is a bubble after these earnings, what would your response be?
That they don't know how to read an income statement, a cash flow statement, or understand financials.
Wow.
I mean, look, it's not a bubble. It is now on a run rate. You talk about this level of profitability with this growth, it's on a run rate to generate more profit than Apple or Alphabet in this fiscal year. Tell me how that's a bubble.
Jose, go ahead. You're going to say something?
I was just going to say, I mean, I'm pretty sure Alex from Ticker Symbol, you just mentioned it here as well. Blackwell, I believe, is sold out for this year already. And I think analysts just love to hear it over and over and over again. And then when that happens, we're going to hear Rubin is sold out for the year, but then they're going to want to hear it every single quarter again for some reason. Because I think the market right now is so short-sighted that they hear some bad news 2 weeks before earnings and believe it changes this whole kind of investment projection from these big tech players. I was going to, I forget, was something else. So pass me. I'll pass for now.
Steve, do you think the market is still going to hinge all on one stock after this earnings, or are people going to chill out a bit?
I mean, I think people need to chill out and realize that there's a bigger market. As exciting as Nvidia is, there's a lot of great companies out there. I mean, look what Salesforce did. Look what Snowflake did. I mean, I know you really shouldn't say those two companies in the same sentence, but Salesforce just had a great quarter. And there's a lot of good things going on. I think tech's going to drive the market higher. But this quarter from Nvidia, the only thing that you could say negative is an unknown factor that nobody knows the answer to. And that is, when does demand plateau and become just maintenance in data centers rather than a radical build? And I don't know that anybody has that answer. I have a speculation that it's going to be 2 to 3 years before we see a shift to more maintaining, but there's no proof in that. I mean, the bottom line is we have seen CapEx spend go from about 190 billion to 320 billion this year in expected based off of all the earnings calls. What we know is it was a fake report with Microsoft. They are spending 80 billion this year, and that their fiscal year ends in Q2 of this year. So the idea that they're going to take their foot off the gas when Amazon is halfway through their CapEx cycle is probably not going to happen. And Microsoft's going to probably come over the top or try to match Amazon. And then in 2 more quarters, you're going to get Amazon, Alphabet, and Meta all doing the same thing again. I think that this is, look, I'm really excited right now. I think that Nvidia, they consolidated last quarter. It didn't go up when it should have. You just got a freaking huge beat, incredible margins, and there is nothing bearish in this report that I've read.
Yeah, I would agree here. And so here's the question, and Jose, I'll give it to you first. So everything that Steve said is incredibly bullish, at least for the next 24 months in terms of demand ramping up. Why do you think the stock's not up? Like, do you legit think that investors are just scared because they just don't believe every quarter they need reassurance again and again that it's going to happen?
I think, I mean, Steve mentioned it, that we don't know when this market is going to end. The AI space kind of came out of nowhere, right? It kind of came out of nowhere. So investors are really worried that if it came out of nowhere, it's going to leave out of nowhere.
Right.
But I think the more you look into this AI space, and that's why I enjoy looking at Nvidia, they're like the top funnel of this. So once you learn from Nvidia, you start to learn about all these other software plays, all these other companies, and kind of the products that they're producing with AI. And it's like, hey, look, AI definitely has multiple growth opportunities. Maybe the robotics in humanoid robotics doesn't work, but humanoid and maybe last mile robotics works, or AI robotics in drones works. So there's so many new growth opportunities that can become multi-$100 billion markets. We just have, and Nvidia just needs to showcase that those markets are evolving.
Steve, same question to you. Do you think that the street's worried it'll go away as quickly as it came?
I don't know what the street is thinking. All I know is that you have to go with the information that's available. And the information that's available is what these companies are spending on CapEx and how they're saying they're spending that CapEx. And the majority of it is going to data centers. And the majority of the data center spend is GPU spend. And then augmented by firewalls, switches, networking stuff. But this is, I mean, look at what Nvidia guided for Q1. I mean,
dude, 43 billion.
Oh yeah, sorry, only 3 billion, extra billion a month. So sorry. So sorry.
Yeah.
I think people get hung up on every little data point, trying to pick things apart. Investing doesn't have to be that difficult. You don't have to go through every word of everything and every little metric. This is a great story. This is a industry that's getting a lot of attention, and the profits are real. They continue to grow, and Nvidia is trading at a very cheap forward multiple, considering that it is not up a ton right now.
They also bought back 7.8 billion of their stock.
And that's another thing that I'm glad you said, because I haven't said it yet. But think about the amount of money that they're going to spend on buybacks and what that's going to do to EPS.
Yeah, it's a fair point. Very fair point. Steve, thank you for joining here. Steve's Twitter right there in the chat for those that want to find him. He also writes on Seeking Alpha. You can find his articles on Twitter, and he's a frequent guest on the show, and we appreciate his commentary. Thank you, Steve.
Yeah, talk to you later.
Talk later.
All right, bye.
7.8 billion. Jose, did that number surprise you on buybacks?
Yeah, but I mean, for me, the thing that gets me the most excited is like we saw that free cash flow, and Nvidia has a massive moat and lead against all the other AI chip players, being ASIC, being competitors or third party like AMD. And with this free cash flow, there's been reports that Nvidia has multiple teams working on various chips at the same time. With this free cash flow, they can build even more and more teams and just increase their moat at such faster level. And this is why sometimes the ASIC space, I feel like it's not really a threat for Nvidia, because sure, Google could make a nice chip and they're doing really good with their TPU. But what happens when Nvidia has all this money and has all these engineering teams just constantly working on better software optimizations, better infrastructure solutions as a system, or just a better chip in general? So I think as Nvidia's free cash flow continues to grow, their lead against any competitor is going to continue to get bigger and bigger.
Yeah, dude, I think the street is just freaking emotional. I so agree with what you said, Jose. They think it's going to go away as quickly as it came, and as a result, they just can't trust paying a premium on a forward multiple, which is not that much of a premium given the PE keeps declining as the stock price goes down and the earnings growth keeps going up. But they're afraid it's going to go away sooner than later. And I think with all the advancements we're seeing with XAI and OpenAI and Figure and self-driving, like this is not going away anytime soon. But I guess the street needs to keep seeing it before they believe it.
Yeah. And XAI actually gave a great example. They released Grok 3, right? And they mentioned that one of the reasons they're able to grow so quickly and improve their AI solutions so quickly is because they have such a huge infrastructure. They had about 200,000 NVIDIA GPUs, I believe they mentioned. So they're showcasing that thing. If you have unlimited wallet, if you want to build great AI, capacity is still very, very crucial for you to build the best product.
Yeah, that is correct. Let's get some more analysis on what's going on with NVIDIA. We have the call in about 15 minutes. Jensen will be live, and then we will get into the earnings call.
But we have to dig more into the margins. And of course, you want to hear about Blackwell, right?
That's absolutely right. You know, I did expect a double beat, and maybe that wasn't too hard to figure out, but I know there were a lot of bears out there that question about. Everything that I want to know is in the CFO commentary and on the call, right? We need to understand details about the Blackwell rollout, supply chain clarity. I would love for Jensen to come out and be very direct on DeepSeek. I've been on your show before saying DeepSeek is actually an opportunity for NVIDIA. I want him to reiterate that with investors. And then anything else, right? Anything that's incongruent with what the Mag 7 said about their $325 billion CapEx. This is a stock that's looking for anything that is off kilter in their belief system. I do believe that the Mag 7 CapEx is built in, but with a slight curve. I think NVIDIA, it's really about a belief beyond 2025 and into 26 and 27.
It looks like we've got some pretty bullish commentary from Jensen Huang in the release as well. And I know we're going to go back to Christina Partsinevelos right now for more from these results. Christina.
Well, just to your point, that bullish commentary, he said, quote, "We've successfully ramped up the massive scale production of Blackwell AI supercomputers. There's concern about the ramp and any delays. We'll get more from the CFO commentary. But I'd like to point out, though, for Q1 revenue guidance, that's coming in at $43 billion. That is higher than the street anticipated. Keep in mind, NVIDIA only guides one quarter at a time. But the non-GAAP Q1 gross margins. That's coming down 71%. So it was 73.5 in Q4. Now it's going to be 71 in Q1. The street was anticipating 72. So that could have been why you saw a little bit of the stock dip right immediately after earnings. Management did warn it would go down and then come back up in the second half of the year around 75%. Guys?
All right, Christina, thank you. Paul, we were talking about it earlier in the show, the possibility of a triple play for Nvidia. It looks like we got that here, but to Christina's point, maybe the non-GAAP gross margin guidance hindering it a little bit.
Yeah, that's a little bit low, but as she said, they're forecasting a pickup in the second half, so that would be a good thing. I think more important than the conference call is going to be the interview at 7 o'clock with John, because hopefully John can flesh out more details on more than a quarter ahead as far as guidance is concerned.
I also think on the call, if they just like head on address the gross margin problem, that would give investors some resolve for their anxiety. But we're going to have to see in the next 15 minutes what they say about this call. Nvidia right here down about 0.14%, basically flat after hours. We did gap up to 136. Now we're back at 131. SMCI, which a lot of people were hoping would pump on Nvidia, that is flat after hours. AMD is flat as well. ASML's up a little bit. Broadcom's up a little bit. Taiwan Semi's up a little bit. Qualcomm's up a little bit. By a little bit, I mean about 20 bips. Marvell's up about 0.3%. And then Dell is down 1%. And Micron is down 0.2% as well. And if you would like to know about all these semiconductor companies, you can subscribe to our good friend's newsletter called What the Chip Happened. Jose, what is this?
What the Chip Happened is this newsletter that I create on a daily basis. And it's pretty much just giving us 3 pieces of semiconductor news so we can understand the market. Today, I actually released a video, kind of NVIDIA's earnings game preview. We looked at kind of the numbers that they were expected to produce today, some of the questions that I was going to have. We also learned about Meta's recent $200 billion revenue. So in about 5 minutes, you're going to get a lot of information of what's impacting the AI space and what's impacting kind of the semiconductor market. We talk sometimes about public companies like Nvidia, sometimes on popular companies like Nvidia, or sometimes we just look at the overall trend. Micron was another company we discussed today. So, I mean, we talked about a lot of things. Sometimes we talked about Microsoft's quantum chip, a lot of great information in a short amount of time.
Yeah, I love it. I'm subscribed to it. 5 minutes, you get a basic review of what the heck's happening with the chip sector. And Jose, you've been investing in the chip sector for a long time. I remember the first time we talked, you told me that you invest your disposable income into SMH versus SPY, right? So, I mean, you've been covering semis for a very long time.
Yeah, I mean, luckily I come from a background of electrical engineering. So I've worked at some pretty cool places, innovative space. And that kind of allows me to invest in this space. I'm not saying I have the biggest edge over anybody else, but I do have a small edge of trying to understand maybe where this technology is going. So I really do enjoy the semiconductor space, and I'm super happy that the whole market is kind of taking a closer look in this industry right now.
Yeah, there you go. What the Chip Happened, and also Jose's Twitter. I'll put that in the chat for those that are on my channel that don't follow him on Twitter. You can get all of his updates from his Twitter as well. So Blackwell apparently has hit 11 billion this quarter. That's the same number you saw, right?
Did they give a number of actual Blackwell chips?
Yeah, I got the number. Blackwell hits 11 billion in first quarter.
Oh, wow.
That came out 5 minutes ago, guys. So that's some new news. 11 billion in Q4.
That is quick.
Data center 32.6, fueled by demand for LLMs, generative AI recommendation. Networking was 3 billion. Oh, wow. So that's not that's the street number was 9 billion on that. They came in at 11.
Yeah. And so it kind of showcases that there is really no Blackwell issue right now, and that capacity is growing at some nice levels. So I'm really happy. I think the Blackwell in forms of inference is a great opportunity with using things like FP4. You kind of see, they talked about even 25x improvements versus the Hopper platform. So I think it came at the perfect time, as right now AI models are going into this time of thinking, is what we call it, the time scaling law in inference. And Blackwell is the perfect product for that.
Yeah, I agree. Nvidia just went green. I think that headline might be getting a little bit of momentum on Nvidia. That's a $2 billion beat, which is incredible. By the way, Salesforce just went green as well. It was down 7%. Now Salesforce is green. We have 9 minutes until the call. Let's get another OG Nvidia investor onto the show, get their thoughts about what's happening. Tanner, what's up?
Welcome, or thank you for having me.
Welcome to your channel, Amit. Thank you, Tanner. I appreciate it.
Thank you, dude. I thought that these earnings were absolutely great, and yet the market's not moving, which just makes the company even cheaper. So I'm going to be adding more. So yeah.
What impressed you the most? I mean, is there anything that's sticking out here?
It looks like guidance, I mean, on the revenue side is very exciting. $43 billion was very exciting for me to see. So I think analysts tomorrow are going to come out, revise even higher. The actual margin side was a little bit disappointing, but at the rate that they're growing, you're not going to get everything perfect. And, you know, just overall, the company continues to bring on more and more money, buy back stock, pay a tiny little dividend, and deliver the best products that is possible in the fastest growing market ever in history. And that's really the sort of long tailwind that I'm excited about, right? So it's not just the data centers, it's the robotics, it's the autonomous driving, it's every single technological advancement. And also with these AI technological advancements, we're going to find and need a lot more advancements going into the future. So I'm not just excited about Nvidia for 2025 or 2026. I'm excited about this for a very, very long-term future. And I've been a shareholder for a long time, and it's just seeming like it's looking more up and up and up. And I'm really excited that, I have an opportunity to increase my average share price just a little bit more.
Definitely. Hey, Tanner, nice to meet you. I think this is the first time we've ever done anything together. So just want to say hi and nice to meet you.
Yeah, Jose, I've followed you for a while. So it's great to meet you. I think maybe
Why
we were
does
in
that sound like
Evan's Stock Markets, one of his calls together one time, but.
Oh, definitely. Yeah. I think we've done something there.
Yeah.
When you said I followed him for a while, it sounded like you were admitting you've been stalking him.
Stalking.
Yeah. You got the Joe from You hat on right now. Like it definitely. Tanner, why is the stock not going up?
Man, honestly, I think and still potentially hold this belief that the stock should be like 200 plus by the end of the year. I mean, I want to see the stock at 250 by the end of the year. I'm so bullish on Nvidia, it's crazy. The fact that it's not moving is really surprising to me, but I just think that there's a lot of just bearish sentiment on competition, on the need for these data centers, how long the cycles will be, and that there has been a lot of times in Nvidia's history where they have taken very steep declines because not that the products of what they are using are not best of class or that they're not needed, but that the cycles have thrown off the stock. So we saw that in crypto cycles and gaming cycles. And so I think people are also fearing that that's going to happen on their data center side. And if that does happen, that's just at a much, much larger scale than Nvidia has ever seen.
Tanner, just curious, when do you foresee any of this cyclicality coming anytime soon?
I don't. So I kept changing and thinking that there was going to be a problem. And then, CapEx spend outlaid by all these Mag 7s just pushed it back even further. And now I'm just thinking like, and I don't want to be that ultra bull that continues to come out, but if there is a certain point where Meta does create this mid-level engineer, then the push for a autonomous high-level engineer beyond is just going to be a continuous self-fulfilling cycle that they are going to need more and more and more spend on. And the only thing that maybe changes that outlook is a DeepSeek-like breakthrough that, people could potentially get a larger output on more of a software breakthrough than just hardware. But it's not actually seeming like that's going to be the case. And until I see that, I'm just going to continue to hold.
Tanner, what questions do you think, or at least, here's a better question. And this is for everyone in the chat as well. I think this is a good one. We got 4 minutes till the call. If you were an analyst on the call, Tanner did have the privilege of being an analyst on the live call. which was awesome. If Nvidia ever invited you onto their call, what question would you ask Jensen?
I'm looking for the next X curve or S curve. So I think the questions that people are not going to be talking about are, talking about automotive and robotics. So this is another thing that I think people are not really factoring in, is like these areas will be bigger than their gaming sections pretty quickly. And then beyond that, how large are they going to get? So I don't necessarily have a question, right off the bat. I thought about my Robinhood question for like a day and a half before I asked it. So I don't know the exact question that I would ask Jensen, but it would be somewhere along the lines of, hey, when do you think that these start, getting to real scale? Already you're seeing growths of 20+% rates in the last couple of quarters on their automotive section. And this is before any real breakthrough. So I think that is going to really scale very quickly, but potentially some timelines on that would be great.
We're up about 2.2% going into the call. Jose, what question are you thinking you would ask?
Hey, does he want to come to my YouTube channel and do a quick interview with me first? It's not outside of that. I think in the robotics industry, that's where I will want to learn more about the synthetic data. We've been in this world where we only really care about real data, synthetic data, because it didn't follow the laws of physics, because it didn't follow kind of the laws of the world. It wasn't as crucial. And now as we're getting things like Cosmo, which are AI models that do follow this physical world, the laws of physics, what is the opportunity there? How fast can you go from training a robot and kind of getting it to just the overall speed changes that things like Cosmo are bringing in the automotive space?
Yeah, essentially, is synthetic data enough to replicate real world data? Because that's where people say Tesla's competitive advantage is. And if it is, I mean, that seems like a moat that's going to be hard to break over the next decade. So I think that would be exciting to learn about for Nvidia as well. Tanner, are you staying on and listening to the call with us, or?
Yeah, I mean, I might jump out at a certain point. I'm pretty sick, so I didn't want to stream this myself. Just the low energy that I'd be bringing. But honestly, this is actually the largest position in my portfolio. So I'm going to be listening very intently and wanted to support all the Nvidia bulls out there.
Yeah, we will be back with Robinhood Weekly next week, guys. Tanner was sick on Monday. Everyone's getting. I was sick last week.
It's always me. Why we're late, eh?
I wasn't feeling the best either. But as soon as you text in the group chat, I'm sick. I was like, well, Tanner's sick.
It's Tanner's fault.
It's Tanner's. It's the Canadians, dude. I don't know what to tell you, but
yeah, I'll be here for the most part.
All right, Palantir's up 1.6%. Nvidia up 2.5%, getting a little bit of a pump going into this. Snowflake, great quarter, 28% year-over-year growth. That's up 11%. And then you own a ton of Salesforce as well, Tanner, right? Did you think this quarter was good for them?
Yeah, so I only took a quick look at the numbers. It was a little weird on the guidance, and I'll need to look into that a little bit more. It looked like top line growth for their next quarter looked a little bit slow to me. I think they were guiding for 6 to 7%. But yeah, I need to go back through. Salesforce is an absolute giant, and I think for like, I don't know how big of a believer you are for Agentforce, but I'm a big believer. I think distribution there will be absolutely huge, and they'll keep doing their things. Salesforce is not going anywhere. And as much as people want to say Palantir is the next Salesforce, I think Salesforce is the next Salesforce.
All right. Well, Nvidia 2.6%. The call should be starting in about 30 seconds. So we'll flip over once the call starts. Just to warn everybody, call's gonna be really boring for the next 35 minutes. Like, it is not going to be exciting. So, I mean, honestly, you can go get some food and come back. Like, it's not going to be exciting at all. But once they're done with reading the PowerPoint financials, Jensen will do the Q&A. Now, here's the other thing. Here's the biggest question: is the mic going to work? Because last time,
they still have a weak mic.
I mean, I would hope the mic works. What's the name of the CF? Colette? Is that the lady who speaks? Right?
Yep.
Okay, so she's going to be speaking for a good 35 minutes, and then we'll see if it starts. All right, here we go. Nvidia Q4. The earnings call is now live.
Answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. And if you'd like to withdraw your question, again, press star 1. Thank you. Stuart Stecker, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to Nvidia's conference call for the fourth quarter of fiscal 2025. With me today from Nvidia are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on Nvidia's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the first quarter of fiscal 2026. The content of today's call is Nvidia's property. It can't be reproduced or transcribed without prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, February 26, 2025, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Stuart. Q4 was another record quarter. Revenue of $39.3 billion was up 12% sequentially and up 78% year on year, and above our outlook of $37.5 billion. For fiscal 2025, revenue was $130.5 billion, up 114% from the prior year. Let's start with data center. Data center revenue for fiscal 2025 was $115.2 billion, more than doubling from the prior year. In the fourth quarter, data center revenue of $35.6 billion was a record, up 16% sequentially and 93% year on year, as the Blackwell ramp commenced and Hopper 200 continued sequential growth. In Q4, Blackwell sales exceeded our expectations. We delivered $11 billion of Blackwell revenue to meet strong demand. This is the fastest product ramp in our company's history, unprecedented. We're increasing supply quickly to meet expanding customer adoption. Our Q4 data center compute revenue jumped 18% sequentially and over 2x year on year. Customers are racing to scale infrastructure to train the next generation of cutting-edge models and unlock the next level of AI capabilities. With Blackwell, it will be common for these clusters to start with 100,000 GPUs or more. Shipments have already started. Post-training and model customization are fueling demand for NVIDIA infrastructure and software as developers and enterprises leverage techniques such as fine-tuning, reinforcement learning, and distillation to tailor models for domain-specific use cases. Hugging Face alone hosts over 90,000 derivatives created from the Llama Foundation model. The scale of post-training and model customization is massive and can collectively demand orders of magnitude more compute. Accelerating, driven by test time scaling and new reasoning models like OpenAI's O3, DeepSeek R1, and Grok 3. Long-thinking reasoning AI can require 100x more compute per task compared to one-shot inferences. Blackwell was architected for reasoning AI inference. Blackwell supercharges reasoning AI models with up to 25x higher token throughput and 20x lower cost versus Hopper 100. It is revolutionary. Transformer Engine is built for LLM and mixture of experts inference. and its NVLink domain delivers 14x the throughput of PCIe Gen 5, ensuring the response time, throughput, and cost efficiency needed to tackle the growing complexity of inference at scale. Companies across industries are tapping into NVIDIA's full stack inference platform to boost performance and slash costs. Snap tripled inference throughput and cut costs by 66% using NVIDIA TensorRT for its screenshot feature. Perplexity sees 435 million monthly queries and reduced its inference costs 3x with NVIDIA Triton Inference Server and TensorRT LLM. Microsoft Bing achieved a 5x speedup and major TCO savings for visual search across billions of images with NVIDIA TensorRT and acceleration libraries. Blackwell has great demand for inference. Many of the early GB200 deployments are earmarked for inference, a first for a new architecture. Blackwell addresses the entire AI market from pre-training, post-training to inference across clouds to on-premise to enterprise. CUDA's programmable architecture accelerates every AI model and over 4,400 applications, ensuring large infrastructure investments against obsolescence in rapidly evolving market. Our performance and pace of innovation is unmatched. We're driven to a 200x reduction in inference costs in just the last 2 years. We deliver the lowest TCO and the highest ROI. And full stack optimizations for NVIDIA and our large ecosystem, including 5.9 million developers, continuously improve our customers' economics. In Q4, large CSPs represented about half of our data center revenue, and these sales increased nearly 2x year on year. Large CSPs were some of the first to stand up Blackwell, with Azure, GCP, AWS, and OCI bringing GB200 systems to cloud regions around the world to meet surging customer demand for AI. Regional clouds hosting NVIDIA GPUs increased as a percentage of data center revenue, reflecting continued AI factory buildouts globally and rapidly rising demand for AI reasoning models and agents. We've launched a 100,000 GB200 cluster-based instance with NVLink Switch and Quantum 2 InfiniBand. Consumer internet revenue grew 3x year on year, driven by an expanding set of generative AI and deep learning use cases. These include recommender systems, vision language understanding, synthetic data generation search, and agentic AI. For example, xAI is adopting the GB200 to train and inference its next generation of Grok AI models. Meta's cutting-edge Andromeda advertising engine runs on NVIDIA's Grace Hopper superchip, serving vast quantities of ads across Instagram, Facebook applications. Andromeda harnesses Grace Hopper's fast interconnect and large memory to boost inference throughput by 3x, enhance ad personalization, and deliver meaningful jumps in monetization and ROI. Enterprise revenue increased nearly 2x year on the accelerating demand for model fine-tuning, RAG, and agentic AI workflows, and GPU accelerated data processing. We introduced NVIDIA Llama Nematron model family NIMs to help developers create and deploy AI agents across a range of applications, including customer support, fraud detection, and product supply chain and inventory management. Leading AI agent platform providers, including SAP and ServiceNow, are among the first to use new models. Healthcare leaders IQVIA, Illumina, and Mayo Clinic, as well as ARC Institute, are using NVIDIA AI to speed drug discovery, enhance genomic research, and pioneer advanced healthcare services with generative and agentic AI. As AI expands beyond the digital world, NVIDIA infrastructure and software platforms are increasingly being adopted to power robotics and physical AI development. One of the early and largest robotics applications in autonomous vehicles, where virtually every AV company is developing on NVIDIA in the data center, the car, or both. NVIDIA's automotive vertical revenue is expected to grow to approximately $5 billion this fiscal year. At CES, Hyundai Motor Group announced it is adopting NVIDIA technologies to accelerate AV and robotics development and smart factory initiatives. Vision transformers, self-supervised learning, multimodal sensor fusion, and high-fidelity simulation are driving breakthroughs in AV development. And CES, we announced the NVIDIA Cosmo World Foundation Model Platform. Just as language foundation models have revolutionized language AI, Cosmos is a physical AI to revolutionize robotics. Leading robotics and automotive companies, including ride-sharing giant Uber, are among the first to adopt the platform. From a geographic perspective, sequential growth in our data center revenue was strongest in the U.S., driven by the initial ramp of Blackwell. Countries across the globe are building their AI ecosystems, and demand for compute infrastructure is surging. France's 200 billion euro AI investment and the EU's 200 billion euro Invest AI initiative offer a glimpse into the build-out to set redefined global AI infrastructure in the coming years. Now, as a percentage of total data center revenue, data center sales in China remained well below level. Absent any change in regulations, we believe that China's shipments will remain roughly at the current percentage. The market in China for data center solutions remains very competitive. We will continue to comply with export controls while serving our customers. Networking revenue declined 3% sequentially. Our networking attached to GPU compute systems is robust at over 75%. We are transitioning from small NVLink 8 with InfiniBand to large NVLink 72 with Spectrum X. Increased and represents a major new growth sector. We expect networking to return to growth in Q1. AI requires a new class of networking. NVIDIA offers NVLink switch systems for HPC supercomputers and Spectrum X for Ethernet environments. Spectrum X enhances the
I hope it doesn't keep canceling out when Jensen speaks, but that's not me. That's not my internet. I think some other people are saying they're also not hearing it right. So NVIDIA needs some GPUs to fix their call right now.
Fargate. Cisco announced integrating Spectrum X into their networking portfolio to help enterprises build AI infrastructure. With its large enterprise footprint and global reach, Cisco will bring NVIDIA Ethernet to every industry. Now moving to gaming and AI PCs. Gaming revenue of $2.5 billion decreased 22% sequentially and 11% year on year. Full year revenue of $11.4 billion increased 9% year on year, and demand remained strong throughout the holiday. However, Q4 shipments were impacted by supply constraints. We expect strong sequential growth in Q1 as supply increases. The new GeForce RTX 50 series desktop and laptop GPUs are here. Built for gamers, creators, and developers, they fuse AI and graphics, redefining visual computing. Powered by the Blackwell architecture, 5th generation Tensor cores, and 4th generation RT cores, and featuring up to 3,400 AI TOPS. These GPUs deliver a 2x performance leap and new AI-driven rendering, including neural shaders, digital human technologies, geometry, and lighting. The new DLSS 4 boosts frame rates up to 8x with AI-driven frame generation, turning one rendered frame into 3. It also features the industry's first real-time application of transformer models, packing 2x more parameters and 4x the compute for unprecedented visual fidelity. We also announced a wave of GeForce Blackwell laptop GPUs with new Nvidia Max-Q technology that extends battery life by up to an incredible 40%. These laptops will be available starting in March from the world's top manufacturers. Moving to our professional visualization business. Revenue of $511 million was up 5% sequentially and 10% year-on-year. Full year revenue of $1.9 billion increased 21% year-on-year. Key industry verticals driving demand include automotive and healthcare. Nvidia technologies and generative AI are reshaping design, engineering, and simulation workloads. Increasingly, these technologies Cadence and Siemens, fueling demand for Nvidia RTX workstations. Now moving to automotive. Revenue was a record $570 million, up 27% sequentially and up 103% year-on-year. Full year revenue of $1.7 billion increased 55% year-on-year. Strong growth was driven by the continued ramp in autonomous vehicles, including cars and robotaxis. At CES, we announced Toyota, the world's largest automaker, will build its next generation vehicles on Nvidia Orin, running the safety certified Nvidia Drive OS. We announced Aurora and Continental will deploy driverless trucks at scale powered by Nvidia Drive 4. Finally, our end-to-end autonomous vehicle platform, Nvidia Drive Hyperion, has passed industry safety assessments by TÜV and TÜV Rheinland, two of the industry's foremost authorities for automotive-grade safety and cybersecurity. Nvidia is the first AV platform to receive a comprehensive set of third-party assessments. Okay, moving to the rest of the P&L. GAAP gross margins was 73%, and non-GAAP gross margins were 73.5%, down sequentially as expected with our first deliveries of the Blackwell architecture. As discussed last quarter, Blackwell is a customizable AI infrastructure with several different types of NVIDIA build chips, multiple networking options, and for air and liquid-cooled data center. We exceeded our expectations in Q4 in ramping Blackwell, increasing system availability, providing several configurations to our customers. As Blackwell ramps, we expect gross margins to be in the low 70s. We are focused on expediting the manufacturing of Blackwell systems to meet strong customer demand as they race to build out Blackwell infrastructure. When fully ramped, we have many opportunities to improve the cost, and gross margin will improve and return to the mid-70s late this fiscal year. Sequentially, GAAP operating expenses were up 9% and non-GAAP operating expenses were 11%, reflecting higher engineering development costs and higher compute. In Q4, we returned $8.1 billion to shareholders in the form of share repurchases and cash dividends. Let me turn to the outlook in the first quarter. Total revenue is expected to be $43 billion, plus or minus 2%. Continuing with its strong demand, we expect a significant ramp of Blackwell in Q1. We expect sequential data center. We expect sequential growth from both compute and networking. GAAP and non-GAAP gross margins are expected to be 70.6%. and 71%, respectively, plus or minus 50 basis points. GAAP and non-GAAP operating expenses are expected to be approximately $5.2 billion and $3.6 billion, respectively. We expect full year, fiscal year 26 operating expenses to be in the mid-30s. GAAP and non-GAAP other income and expenses are expected to be an income of losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17% plus or minus 1%, excluding any discrete items. Further financial details are included on the website, including a new financial information AI agent. In closing, let me highlight upcoming events for the financial community. We will be at the TD Cowen Healthcare Conference in Boston on March 3rd, and at the Morgan Stanley Technology, Media, and Telecom Conference in San Francisco on March 5th. Please join us for our annual GTC conference starting Monday, March 17th in San Jose, California. Jensen will deliver a news-packed keynote on March 18th, and we will host a Q&A session for our financial analysts the next day, March 19th. We look forward to seeing you at these events. Our earnings call to discuss the results for our first quarter of fiscal 2026 is scheduled for May 28th. I'm going to open up the call, operator, to questions. If you could start that, that would be great.
Thank you. At this time, I would like to remind everyone, in order to ask a question, please press star, then the number 1 on your telephone keypad. I also ask that you please limit yourself to one question. For any additional questions, please re-queue. And your first question comes from CJ Muse with Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess for me, Jensen, as test-time compute and reinforcement learning show such promise, we're clear.
That's not good.
What does this mean for the potential future of potentially inference dedicated clusters? And how do you think about the overall impact to NVIDIA and your customers? Thank you.
Yeah, I appreciate that, CJ. There are now multiple scaling laws. There's the pre-training scaling law, and that's going to continue to scale because we have multimodality. We have data that came from reasoning that are now used to do pre-training. And then the second is post-training scaling law, using reinforcement learning human feedback, reinforcement learning AI feedback, reinforcement learning verifiable rewards. The amount of computation you use for post-training is actually higher than pre-training. And it's kind of sensible in the sense that you could, while you're using reinforcement learning, generate an enormous amount of synthetic data or synthetically generated tokens. AI models are basically generating tokens to train AI models. And that's post-training. And the third part, this is the part that you mentioned, is test-time compute or reasoning, long thinking, inference scaling. They're all basically the same ideas. And there you have chain of thought, you have search. The amount of tokens generated, the amount of inference compute needed is already 100 times more than the one-shot examples and the one-shot capabilities of large language models in the beginning. And that's just the beginning. This is just the beginning. The idea that the next generation could have thousands times and even hopefully extremely thoughtful and simulation-based and search-based models that could be hundreds of thousands, millions of times more compute than today is in our future. And so the question is, how do you design such an architecture? Some of it Some of the models are auto-regressive. Some of the models, the times you want your data center to have disaggregated inference, sometimes it's compacted. And so it's hard to figure out what is the best configuration of a data center, which is the reason why NVIDIA's architecture is so popular. We run every model. We are great at training. The vast majority of our compute today is actually inference. And Blackwell takes all of that to a new level. We designed Blackwell with the idea of reasoning models in mind. And when you look at training, it's many times more performant. But what's really amazing is for long thinking, test time scaling, reasoning AI models were tens of times faster, 25 times higher throughput. And so Blackwell is going to be incredible across the board. And when you have a data center that allows you to configure and use your data center based on, are you doing more pre-training now, post-training now, or scaling out your inference, our architecture is fungible and easy to use in all of those different ways. And so we're seeing, in fact, much, much more concentration of a unified architecture than ever before.
Your next question comes from the line of Joe Moore with JP Morgan. Please go ahead.
Morgan Stanley, actually, thank you. I wonder if you could talk about GB200 at CES. You sort of talked about the complexity of the rack level systems and the challenges you have. And then, as you said in the prepared remarks, we've seen a lot of general availability. Where are you in terms of that ramp? Are there still bottlenecks to consider at a systems level above and beyond the chip level? And just, have you maintained your enthusiasm for the NVL72 platforms?
Well, I'm more enthusiastic today than I was at CES. And the reason for that is because we've shipped a lot more since CES. We have some 350 plants manufacturing the 1.5 million components that go into each one of the Blackwell racks, Grace Blackwell racks. Yes, it's extremely complicated, and we successfully and incredibly ramped up Grace Blackwell, delivering some $11 billion in revenues last quarter. We're going to have to continue to scale as demand is quite high and customers are anxious and impatient to get their Blackwell systems. You've probably seen on the web a fair number of celebrations about Grace Blackwell systems coming online, and we have them, of course. We have a fairly large installation of Grace Blackwells for our own engineering and our own design teams and software teams. CoreWeave has now been quite public about the successful bring up of theirs. Microsoft has, of course, OpenAI has, and you're starting to see many come online. And so I think the answer to your question is nothing is easy about. Right.
Your next question comes from the line of Vivek Arya with Bank of America Securities. Please go ahead.
Thank you for taking my question. Colette, if you wouldn't mind confirming if Q1 is the bottom for gross margin. And then, Jensen, my question is for you, sustain into next year, and has DeepSeek and whatever innovations they came up with, has that changed that view in any way? Thank you.
Let me first take the first part of the question there regarding the gross margins will be in the low 70s. At this point, we are focusing on expediting our manufacturing to make sure that we can provide to customers as soon as possible. Our Blackwell fully ramps, we can improve our cost and our gross margin. So we expect to probably be in the mid-70s later this year. Walking through what you heard Jensen speak about the systems and their complexity. They are customizable in streams to make sure that we can provide to customers as soon as possible. Our Blackwell has fully ramped, and once our Blackwell fully ramps, we can improve our cost and our gross margin. So we expect to probably be in the mid-70s later this year. Walking through what you heard Jensen speak about the systems and their complexity. They are customizable in some cases. They've got multiple networking options. They have liquid cooled and water cooled. So we know there is an opportunity for us to improve these gross margins going forward. But right now we are going to focus on getting the manufacturing complete and to our customers as soon as possible.
We know several things, Vivek. We have a fairly good line of sight of the amount of capital investment that data centers are building out towards. We know that going forward, the vast majority of software is going to be based on machine learning. And so accelerated computing and generative AI, reasoning AI, are going to be the type of architecture you want in your data center. We have, of course, forecasts and plans from our top partners. And we also know that there are many innovative, really exciting startups that are still coming online as new opportunities for developing the next breakthroughs in AI, whether it's agentic AIs, reasoning AIs, or physical AIs. The number of startups are still quite vibrant, and each one of them need a fair amount of computing infrastructure. And so I think the whether it's the near-term signals or the midterm signals, near-term signals, of course, are POs and forecasts and things like that. Midterm signals would be the level of infrastructure and CapEx scale out compared to previous years. And then the long-term signals has to do with the fact that we know fundamentally software has changed from hand coding that runs on CPUs to machine learning and AI-based software that runs on GPUs and accelerated computing systems. And so we have a fairly good sense that this is the future of software. And then maybe as you roll it out, another way to think about that is we've really only tapped consumer AI and search and some amount of consumer generative AI, advertising, recommenders, kind of the early days of software. The next wave's coming. Agentic AI for enterprise, physical AI for robotics, and sovereign AI as different regions build out their AI for their own ecosystems. And so each one of these are barely off the ground, and we can see them. We can see them because obviously we're in the center of much of this development, and we can see great activity happening in all these different places, and these will happen. So near term, midterm, long term.
Your next question comes from the line of Harlan Sur with JP Morgan. Please go ahead.
Yeah, good afternoon. Thanks for taking my question. Your next generation Blackwell Ultra is set to launch in the second half of this year, in line with the team's annual product cadence. Jensen, can you help us understand the demand dynamics for Ultra, given that you'll still be ramping the current generation Blackwell solutions? How do your customers and the supply chain also manage the simultaneous ramps of these two products? And is the team still on track to execute Blackwell Ultra in the second half of this year?
Yes. Blackwell Ultra is second half. As you know, the first Blackwell was, we had a hiccup that probably cost us a couple of months. We're fully recovered, of course. The team did an amazing job recovering, and all of our supply chain partners and just so many people helped us recover at the speed of light. And so now we've successfully ramped production of Blackwell. But that doesn't stop the next train. The next train is, is on an annual rhythm, and Blackwell Ultra with new networking, new memories, and of course new processors, and all of that is coming online. We've been working with all of our partners and customers, laying this out. They have all of the necessary information, and we'll work with everybody to do the proper transition. This time between Blackwell and Blackwell Ultra, the system architecture is exactly the same. It's a lot harder going from Hopper to Blackwell because we went from an NVLink 8 system to a NVLink 72 base system. So the chassis, the architecture of the system, the hardware, the power delivery, all of that had to change. This was quite a challenging transition, but the next transition will slot right in. Blackwell Ultra will slot right in. We've also already revealed and been working very closely with all of our partners on the click after that. And the click after that is called Vera Rubin. And all of our partners are getting up to speed on the transition of that. And so preparing for that transition. And again, we're going to provide a big, huge step up. And so come to GTC, and I'll talk to you about Blackwell Ultra, Vera Rubin, and then show you what's the one click after that. Really exciting new product. So come to GTC, please.
Your next question comes from the line of Timothy Arcuri with UBS. Please go ahead.
Thanks a lot. Jensen, we hear a lot about custom ASICs. Can you kind of speak to the balance between custom ASIC and merchant GPU? We hear about some of these heterogeneous superclusters to use both GPU and ASIC. Is that something customers are planning on building, or will these infrastructures remain fairly distinct? Thanks.
Well, we build very different things than ASICs. In some ways, completely different. In some areas, we intersect. We're different in several ways. One, NVIDIA's architecture is general. Whether you've optimized for autoregressive models or diffusion-based models or vision-based models or multimodal models or text models, we're great at all of it. We're great at all of it because our software stack is our architecture is flexible, our software stack ecosystem is so rich that we're the initial target of most exciting innovations in algorithms. And so by definition, we're much more general than narrow. We're also really good from the end to end, from data processing, the curation of the training data, to the training of the data, of course, to reinforcement learning used in post-training, all the way to inference with test time scaling. So we're general, we're end to end, and we're everywhere. And because we're not in just one cloud, we're in every cloud. We could be on-prem, we could be in a robot. Our architecture is much more accessible and a great initial target for anybody who's starting up a new company. And so we're everywhere. And then the third thing I would say is that our performance and our rhythm is so incredibly fast. Remember that these data centers are always fixed in size. They're fixed in size or they're fixed in power. And if our performance per watt is anywhere from 2x to 4x to 8x, which is not unusual, it translates directly to revenues. And so if you have a 100 megawatt data center, if the performance or the throughput in that 100 megawatt or that gigawatt data center is 4 times or 8 times higher, your revenues for that gigawatt data center is 8 times higher. And the reason that is so different than data centers of the past is because AI factories are directly monetizable through its tokens generated. And so the token throughput of our architecture being so incredibly fast is just incredibly valuable to all of the companies that are building these things for revenue generation reasons and capturing the fast ROIs. And so I think the third reason is performance. And then the last thing that I would say is the software stack is incredibly hard. Building an ASIC is no different than what we do. We have to build a new architecture, and the ecosystem that sits on top of our architecture is 10 times more complex today than it was 2 years ago. And that's fairly obvious because the amount of software that the world is building on top of our architecture is growing exponentially, and AI is advancing very quickly. So bringing that whole ecosystem on top of multiple chips is hard. And so I would say that those 4 reasons, and then finally I will say this: just because the chip is designed doesn't mean it gets deployed. And you've seen this, over and over again. There are a lot of chips that gets built, but when the time comes, a business decision has to be made. And that business decision is about deploying a new engine, a new processor into a limited AI factory in size, in power, and in time. And our technology is not only more advanced, more performant, it has much better software capability, and very importantly, our ability to deploy is lightning fast. And so these things are not for the faint of heart, as everybody knows now. And so there's a lot of different reasons why we do well, why we win.
Your next question comes from the line of Ben Reitz with Melius Research. Please go ahead.
Yeah, hi, Ben Reitz is here. Hey, thanks a lot for the question. Hey, Jensen, it's a geography-related question. You did a great job explaining some of the demand underlying, factors here on the strength. But U.S. was up about $5 billion or so sequentially. And I think, there is a concern about whether U.S. can pick up the slack if there's regulations towards other geographies. And I was just wondering, as we go throughout the year, if this kind of surge in the U.S. continues and it's going to be, whether that's okay, and if that, underlies your growth rate, how can you keep growing so fast with this mix shift towards the U.S.? Your guidance looks like China is probably up sequentially. So just wondering if you could go through that dynamic and maybe Colette can weigh in. Thanks a lot.
China is approximately the same percentage as Q4 and as previous quarters. It's about half of what it was before the export control, but it's approximately the same in percentage. With respect to geographies, the takeaway is that AI is software. It's modern software. It's incredible modern software, but it's modern software. And AI has gone mainstream. AI is used in delivery services everywhere, shopping services everywhere. If you were to buy, a quart of milk and it's delivered to you, AI was involved. And so almost everything that a consumer service provides, AI is at the core of it. Every student will use AI as a tutor. Healthcare services use AI. Financial services use AI. No fintech company will not use AI. Every fintech company will. Climate tech company use AI. Mineral discovery now uses AI. The number of every higher education, every university uses AI. And so I think it is fairly safe to say that AI has gone mainstream and that it's being integrated into every application. And our hope is that of course the technology continues to advance safely and advance in a helpful way to society. And with that, we're I do believe that we're at the beginning of this new transition. And what I mean by that in the beginning is remember, behind us has been decades of data centers and decades of computers that have been built. And they've been built for a world of hand coding and general purpose computing and CPUs, and so on and so forth. And going forward, I think it's fairly safe to say that that world is going to be almost all software will be infused with AI. All software and all services will be ultimately based on machine learning, and the data flywheel is going to be part of improving software and services, and that the future computers will be accelerated. The future computers will be based on AI, and we're really at 2 years into that journey, and in modernizing computers that have taken decades to build out. And so I'm fairly sure that we're in the beginning of this new era. And then lastly, no technology has ever had the opportunity to address a larger part of the world's GDP than AI. No software tool ever has. And so this is now a software tool that can address a much larger part of the world's GDP, more than any time in history. And so the way we think about growth and the way we think about whether something is big or small has to be in the context of that. And when you take a step back and look at it from that perspective, we're really just in the beginnings.
Your next question comes from the line of Aaron Rakers with Wells Fargo. Please go ahead. Aaron, your line is open. Your next question comes from Mark Lipacis with Evercore ISI. Please go ahead.
Hi, that's Mark Lipacis. Thanks for taking the question. I had a clarification and a question. Colette, up for the clarification. Did you say that enterprise within the data center grew 2x year on year for the January quarter? And if so, would that make it faster growing than the hyperscalers? And then Jensen, for you, the question, hyperscalers are the biggest purchasers of your solutions, but they buy equipment for both internal and external workloads, external workloads being cloud services that enterprises use. So the question is, can you give us a sense of how that hyperscaler spend splits between the external workload and internal? And as these new AI workloads and applications come up, would you expect enterprises to become a larger part of that consumption mix? And does that impact how you develop your service, your ecosystem? Thank you.
Sure. Thanks for the question regarding our enterprise business. Yes, it grew 2x, and very similar to what we were seeing with our large CSPs. Keep in mind, these are both important areas to understand. Working with the CSPs can be working on large language models, can be working on inference in their own work, but keep in mind, that is also where the enterprises are surfacing. Your enterprises are both with your CSPs as well as in terms of building on their own. They're both correct, growing quite well.
The CSPs are about half of our business, and the CSPs have internal consumption and external consumption, as you say. And we're of course, used for internal consumption. We work very closely with all of them to optimize workloads that are internal to them because they have a large infrastructure of Nvidia gear that they could take advantage of. And the fact that we could be used for AI on the one hand, video processing on the other hand, data processing like Spark, we're fungible. And so the useful life of our infrastructure is much better. If the useful life is much longer, then the TCO is also lower. And so the second part is, how do we see the growth of enterprise, or not CSPs, if you will, going forward? And the answer is, I believe long term, it is by far larger. And the reason for that is because if you look at the computer industry today, and what is not served by the computer industry is largely industrial. So let me give you an example. When we say enterprise, and let's use a car company as an example, because they make both soft things and hard things. And so in the case of a car company, the employees would be what we call enterprise, and agentic AI and software planning systems and tools, and we have some really exciting things to share with you guys at GTC. Those agentic systems are for employees, to make employees more productive, to design, to market, to plan, to operate their company. That's agentic AIs. On the other hand, the cars that they manufacture also need AI. They need an AI system that trains the cars, treats this entire giant fleet of cars. And, today, there's a billion cars on the road. Someday, there'll be a billion cars on the road, and every single one of those cars will be, robotic cars. And they'll all be collecting data, and we'll be improving them using an AI factory. Whereas they have a car factory today, in the future, they'll have a car factory and an AI factory. And then inside the car itself is a robotic system. And so, as you can see, there are 3 computers involved. And there's the computer that helps the people. There's the computer that builds the AI for the machineries. It could be, of course, it could be a tractor. It could be a lawnmower. It could be a humanoid robot that's being developed today. It could be a building. It could be a warehouse. These physical systems require a new type of AI we call physical AI. They can't just understand the meaning of words and languages, but they have to understand the meaning of the world. Friction and inertia, object permanence and cause and effect, and all of those type of things that are common sense to you and I, but AIs have to go learn those physical effects. So we call that physical AI. That whole part of using agentic AI to revolutionize the way we work inside companies, that's just starting. This is now the beginning of the agentic AI era, and you hear a lot of people talking about it, and we've got some really great things going on. And then there's the physical AI after that, and then there are robotic systems after that. And so these 3 computers are all brand new, and my sense is that long-term, this will be by far the larger of them all, which kind of makes sense. The world's GDP is represented by either heavy industries or industrials and companies that are providing for those.
Your next question comes from the line of Aaron Rakers with Wells Fargo. Please go ahead.
Yeah, thanks for letting me back in. Jensen, I'm curious, as we now approach the 2-year anniversary of really the Hopper inflection that you saw in 2023 in Gen AI in general, and we think about the roadmap you have in front of us, how do you think about the infrastructure that's been deployed from a replacement cycle perspective, and whether, if it's GB300 or if it's the Rubin cycle where we start to see maybe some refresh opportunity? I'm just curious of how you look at that.
I appreciate it. First of all, people are still using volts and pascals and amperes. And the reason for that is because there are always things that, because CUDA is so programmable, you could use it right. Well, one of the major use cases right now is data processing and data curation. You find a circumstance that an AI model is not very good at. You present that circumstance to a vision language model. Let's say it's a car. You present that circumstance to a vision language model. The vision language model actually looks at the circumstance and said, "This is what happened, and I wasn't very good at it." You then take that response, the prompt, and you go and prompt an AI model to go find in your whole lake of data other circumstances like that, whatever that circumstance was. And then you use an AI to do domain randomization and generate a whole bunch of other examples. And then from that, you can go train the model. And so you could use the amperes to go and do data processing and data curation and machine learning based search. And then you create the training data set, which you then present to your Hopper systems for training. And so each one of these architectures are they're all CUDA compatible, and so everything runs on everything. But if you have infrastructure in place, then you can put the less intensive workloads onto the install base of the past. All of our GPUs are very well employed.
We have time for one more question, and that question comes from Atif Malik with Citi. Please go ahead.
Hi, thank you for taking my question. I have a follow-up question on gross margins for Colette. Colette, I understand there are many moving parts, the Blackwell yields and NVLink 72 and Ethernet mix, and you kind of tiptoed the earlier question if April quarter is the bottom. But second half would have to ramp like 200 basis points per quarter to get to the mid-70s range that you're giving for the end of the fiscal year. And we still don't know much about tariffs impact to broader semiconductors. So what kind of gives you the confidence in that trajectory in the back half of this year?
Yeah, thanks for the question. Our gross margins, they're quite complex in terms of the material and everything that we put together in a Blackwell system. Tremendous amount of opportunity to look at a lot of different pieces of that on how we can better improve our gross margins over time. Remember, we have many different configurations as well on Blackwell that will be able to help us do that. So together, working after we get some of these really strong ramping completed for our customers, we can begin a lot of that work. If not, we're going to probably start as soon as possible if we can. And if we can improve it in the short term, we will also do that. Tariffs, at this point, it's a little bit of an unknown. It's an unknown until we understand further what the U.S. government's plan is, both its timing, its where, and how much. So at this time, we are awaiting. But again, we would, of course, always follow export controls and or tariffs in that manner.
Ladies and gentlemen, that does conclude our question and answer session. I'm sorry.
Thank you.
And we're gonna open up to Jensen, and I believe he has a couple things.
I just want to thank you. Thank you, Colette. The demand for Blackwell is extraordinary. AI is evolving beyond perception and generative AI into reasoning. With reasoning AI, we're observing another scaling law, inference time or test time scaling. The more computation, the more the model thinks, the smarter the answer. Models like OpenAI's Grok 3, DeepSeek R1 are reasoning models that apply inference time scaling. Reasoning models can consume 100 times more compute. Future reasoning models can consume much more compute. DeepSeek R1 has ignited global enthusiasm. It's an excellent innovation, but even more importantly, it has open sourced a world-class reasoning AI model. Nearly every AI developer is applying R1 or chain of thought and reinforcement learning techniques like R1 to scale their model's performance. We now have 3 scaling laws, as I mentioned earlier, driving the demand for AI computing. The traditional scaling laws of AI remains intact. Foundation models are being enhanced with multimodality, and pre-training is still growing. But it's no longer enough. We have 2 additional scaling dimensions. Post-training scaling, where reinforcement learning, fine-tuning, model distillation require orders of magnitude more compute than pre-training alone. Inference time scaling and reasoning, where a single query can demand 100 times more compute. We designed Blackwell for this moment, a single platform that can easily transition from pre-training, post-training, and test time scaling. Blackwell's FP4 transformer engine and NVLink 72 scale-up fabric and new software technologies let Blackwell process reasoning AI models 25 times faster than Hopper. Blackwell in all of its configurations is in full production. Each Grace Blackwell NVLink 72 rack is an engineering marvel. 1.5 million components produced across 350 manufacturing sites by nearly 100,000 factory operators. AI is advancing at light speed. We're at the beginning of reasoning AI and inference time scaling. But we're just at the start of the age of AI. Multimodal AIs, enterprise AI, sovereign AI, and physical AI are right around the corner. We will grow strongly in 2025. Going forward, data centers will dedicate most of CapEx to accelerated computing and AI. Data centers will increasingly become AI factories, and every company will have them, either rented or self-operated. I want to thank all of you for joining us today. Come join us at GTC in a couple of weeks. We're going to be talking about Blackwell Ultra, Rubin, and other new computing, networking, reasoning AI, physical AI products, and a whole bunch more. Thank you.
All right. That is the NVIDIA Q4 2024 call. Tanner, we'll start with you. What are your raw thoughts on the call?
There wasn't too many things there that I heard that was mind-blowing that we didn't already know. The important part is that they continue to move forward, and they're going to be doing exactly what they're already doing. Grace Blackwell is going to continue to push out, and they're doing that faster than what was previously expected. Yeah, I'm very excited. I'll probably buy tomorrow. I think that this is crazy, and the tariff questions at the end didn't seem to be too exciting for people, but that's short term. I really try to look long term on a lot of my investments, especially Nvidia, and I think that Jensen continued to try to push that accelerated computing is going to be every form of computing, and that you're going to need their GPUs to do that. So more customers for them in the future.
Okay. Jose, your thoughts on the call?
I have a few notes here. I think the team did a great job of maybe trying to push some of the negative discussions. For example, at the end, Jensen was really talking about how DeepSeek was a great thing for NVIDIA, as it's going to push more software innovation, which is going to need more inference. And then he followed through with saying how Blackwell provides great ROI in that segment. So it kind of he's trying to take away this negative thoughts on DeepSeek. I like that a lot. Then another market that kind of gets a lot of bearish thoughts for NVIDIA is the ASIC space, which is these custom chips. And Jensen pretty much mentioned that, hey, good luck to other people trying to develop their chips. Just because you design a chip, it doesn't mean it's going to be built. So he's just throwing shots at good luck to Meta, good luck to Amazon, good luck to Google. Continue to design your chips. We're just going to do a better design. And also another thing that I really liked is the Blackwell platform he mentioned was focused mainly is starting as a platform focused on inference, no longer just training. So it does kind of give you that segment that NVIDIA is definitely a strong player in the inference space. And maybe the last thing I have here is cloud server providers are 50% of total revenue. The market, for some reason, always believes it's a lot bigger. I mean, 50 is still huge, but that means the other 50 is just all other types of companies out there. And enterprise did grow 2 times year over year, they mentioned during the call. So I think tomorrow we're going to wake up to a lot of price target hikes and bullish sentiment from various analysts.
Yeah, I think this, sort of flat line on after hours is not warranted. I actually think it should be up and up quite a lot. You were right on the DeepSeek stuff. I mean, he just needs to continue to push that this is actually a positive for their business, and that the fact that we dropped to like $112 was, crazy, but it's really uncertainty that drove that down because people just didn't know.
I think this was an amazing quarter. I think it was a record quarter. I think the stock should be up. I agree, at least 10%. It's not. And if it gaps down tomorrow, I mean, my average was 125. If we actually get below 125, I'll be buying more. I mean, this was not a quarter to sell off this stock. The call, was it kind of boring? And was it a bit repetitive at certain times? Yes. But at this point, we've heard this call, the same narrative, like for 2 years in a row. So at this point, the analysts just want to hear the same thing over and over again. But if they're going to do $43 billion in revenue, and I would imagine a little bit more than $11 billion in Blackwell revenues next quarter, with gross margins bottoming around that 70% range, this stock's going to be very cheap tomorrow if it's down a couple percent, as that PE is going to collapse given the growth that they just put up.
Yeah, I think one of the questions that I'm going to have to think over throughout the night is they're really trying to push heavy revenue growth with this Blackwell platform in response of losing some gross margin. And I'm trying to picture why they're really trying to do that. The only thing I can think of is right now, the only competitor for Nvidia, it's really Nvidia. So I wonder if they might have some kind of contracts with certain manufacturers or certain kind of components that are only used on the Blackwell 200. So they want to get rid of that before the Blackwell 300 comes in and maybe kind of eats up some of the market. So Nvidia is his only competitor, but I have to think about that a little bit more of why they really want to expedite it so quickly in loss of margins. It's not a big deal. It's not much margin loss. We're still in the low 70s, but I'm going to have to read this transcript a few times to figure that out.
And temporary, right? So they said, they want to bring that back up to mid 70s by the later in the year. So that was an interesting comment. I thought that was very interesting. But the fact that they are turning that back around, and they said that this is not something that they're going to do over 24 or 36 months, that this is just a short-term sort of idea to potentially, gain more market share, or like you said, get at the Blackwells before the, GB300s come out, then that's sort of what they'll have to do. Overall, go ahead.
I was just a quick question. Do any of you have any fears of cyclicality, or did Jensen kind of get rid of those fears for you guys?
No, not necessarily. No, I mean, to be honest, I'm holding this company through to the end, regardless. But overall, I actually don't think that that's what's going to happen. I think that the market share of what analysts are wrapping their heads around, every single time I think about AI, every single time the market gets larger. And so I actually don't think that there's going to be a lot of cyclicality, but it is a real possibility. It's happened to Nvidia before, but for me, this is not a trade. This is an investment, and it's a very long-term one. So,
and very similar, Tanner, this is a long-term investment for me. The cyclicality has always been true in the semiconductor space, and that's the time when one loads the truck. So while there might be opportunities here where I buy here and there and maybe increase my position, if we do have a cyclicality and we continue to see kind of this innovation from Nvidia, that would be the time where that's where I would literally load the truck, even though it could be a market. Again, I don't see it. Let me just say that I don't see cyclicality happening right now. We're kind of seeing this strong growth in AI, but when and if it does happen, that would be maybe a sucky 1-2 years. Sometimes it lasts a bit, but it would be the great time to start adding more and making this even bigger and bigger.
Right. All right, there you go. Nvidia ended up being a nothing burger in terms of the stock, if that's all people cared about. But I guess that's better than it gapping down 20%.
For now, honestly, I think that this is still a killer name. And I think that, like Jose said, tomorrow is going to be a flurry of upgrades.
Yeah, I think we'll get upgrades. I don't know if the stock will go up tomorrow, but I definitely think the average analyst price, I think, is 185. I think that can get closer to 200 based on these numbers. All right, cool. There we go. Tanner and Jose's links are going to be in the description. They're also right here in the chat. Thank you, everybody, for joining. I think at one point we had 21,000 people watching, a bunch of YouTubers try to analyze what's going on with Nvidia. So definitely mainstream media is starting to shift a little bit when it comes to finance content. And we are incredibly grateful for everyone taking the time out of their lives and being with us. And Jensen will be on in about an hour in CNBC. Tomorrow in My Market Open, we'll cover that. Everyone will be able to see kind of what's going on. But yeah, I think they crushed it, and hopefully the stock reacts positively going tomorrow. All right, that's it. Jose, Tanner, thank you. Thank you, everybody, for being here. We will see you guys next quarter.
Thanks, guys.
Bye, everybody. Have a good one.